Welcome to the official PAK Podcast. My name is Piper.
And I'm Aaron.
And I'm Kevin.
And today we're going to be talking a little bit about who we are, where we come from, where our money's at, and kind of just our knowledge and expertise around investing and why you might want to listen to us, why you might find this podcast and website and other resources useful. So that's what's going to be here in episode 1.
Anybody tells you money's the root of all evil doesn't f***ing have it.
Money never sleeps, pal.
They made billions and billions.
I'm gonna make him an offer again with you.
I want you to deal with your problems by becoming rich. Show me the money!
All right, guys. So this is the inaugural first podcast.
Season 1, episode 1.
Okay.
Season 1, episode 1. Are we having seasons?
Yeah, obviously.
All right. I mean, yeah.
Why wouldn't we?
Investing's a year-round thing. So what are we talking about? What's our story? Why are we called PAK? Wolf PAK? What?
Well, it's simple. My name is Piper. His name is Aaron, and your name is Kevin. And together we form PAK.
Aaron with an A, Kevin with a K, Piper with a P. PAK.
And beyond that, we've just kind of found inspiration in that it's so much easier to invest when you're talking with other people, and to go at it alone, to be that lone wolf, is very hard. To know all the companies that are on sale and that are good values and that are going to be, having major gains is hard to do by yourself. But when you're in a group, kind of a mastermind group with other people, it makes it so much easier. So kind of the goal of this podcast for me is just to, work on my investing practice and share our information with other people for free, and hopefully give them some major gains as well.
You said it right, man.
I'll also add in there, you said lone wolf, and for a long time I was going about this alone, just by myself, crushing it, obviously. But at the same time, the lone wolf doesn't survive long in nature. So you got to have the people around you that are going to support you, help call your bullshit when you are feeding bullshit, when you're buying the HMNYs of the world. Stay away from those.
We'll talk about that in a future episode, I'm sure.
Well, these guys really helped pull me out of a hole. I was really into the crypto market, and I needed a new perspective on my money. So these guys helped me and taught me more about the other markets.
Yeah, and if you're listening to this, obviously for the first time, we're not just talking about investing. We're going to be talking about cryptos. We're going to talk about real estate investing. We're going to talk about the specific companies that we're buying on a daily basis. We're going to try to be releasing episodes once a week, but for this first week, we're going to do one every day just to kind of get you guys pumped up, let you know kind of the basics of where we're coming from. And then from then on, we'll be doing a weekly podcast with stocks of the week, predictions of the week, and stuff like that. So a lot of exciting things to come, I think.
We're also going to be talking about life, right? This is life.
That's right.
This is why we get up in the morning.
Investing is one of those things, especially when you're starting it young like we are, where you're just trying to get to that point where you can retire whenever you want, or you can do whatever you want with your life because money isn't an issue. I'll tell a little personal story real quick. One of the reasons I got into investing was a mentor of, I think, all of ours, Phil Town, who basically spoke about investing in the way that you're using your money to promote your values. You're promoting the companies that you want to see around the world. I always saw investing, the last 10 years as kind of a game, something that I didn't really want to take a part of. Investors are people that don't really contribute to society in any meaningful way. But now I kind of see it more as, I'm voting with my money. I'm putting my money in companies that I believe in, that I want to be around. I'm not putting my money in oil companies and things that I don't want to see, in this world. And so that's why investing hits home for me personally.
Yeah, and just to kind of piggyback on that, none of us are buying cigarette companies. We're not buying oil companies. It doesn't mean that you, the listener out there, can't invest in these things. But really, before you do, ask yourself, is this a company that excites me? Do they do great things in the world, or are they kind of just making the world a worse place and they're just taking profits? I mean, that's kind of a great first question is, and my grandfather taught me to invest, and that the thing that he taught me was buy stocks that you are already going to those places. So if you shop at Nike, which I do, if you go to Starbucks every day, which I do, shop on Amazon, those are companies that you should own for a long, long, long time.
Yeah, so if they go down, you're not going to freak out and sell them and lose your money. It's okay if they go down because you know that you believe in them, so they'll go up eventually.
And Piper is actually our crypto queen.
Hey.
That's her nickname we got for her.
So Cali crypto queen.
You know, a lot of people don't think that there's value in cryptos, but for someone like Piper, she's not just in it for the money. She actually believes in like the new form of currency and the kind of anti-government stance of, and you know, anti-control of government and money. So talk about that. Why you're so into cryptos.
Well, Aaron, that's a great question. Everyone asks me, like, why do you invest in cryptos? And for me, it's really the community of people that believe that there is something different than these fat pigs that make all this money that's controlling the market. And it's also, it is a way to make money, sure, but really, I'm not really banking on that happening. I can go on and forever about investing in Bitcoins, but the reason why I started was, well, actually, that was what I did before I even invested in stocks. I was like, I need to invest in cryptocurrencies. And luckily, I got in early enough to where I made money. But, that we'll see how that goes and plays out. And
Piper didn't learn her lesson, though. She was early on in her investing days.
But she is younger than both of us.
Yeah.
And so she's got a head start easily on either of us.
Aaron and I told her the whole way that crypto, what'd you get in at 6,000 on Bitcoin?
No, I got in at 1,800.
1,000, went up to 20,000. Aaron and I told her the whole time, Piper, sell, take your money off the table, sell.
Nah.
But you learned a valuable lesson. That's at the very least.
Let's just say I made a lot of money and then I didn't. So we're back to square one.
Gains,
it's
people.
fine.
Yeah, it's just like trading with paper money. I think one of our, even if you're scared to invest, maybe you're in your early 20s, you don't have the money, you don't even have $1,000 to invest. You can use paper money and you can kind of see, okay, I bet on this company. I'm going to follow it for 6 months and see where it is. And holy crap, I could have made 50% gains on my money. I need to save up. And it gets you so motivated to save your money, to not eat out every day at lunch. If you're working, to bring your lunches and to do everything you can to kind of save that money, because you could buy that new $2,000 TV, but that new $2,000 TV is actually a $6,000 TV if you invest that money and you get 20% gains on that money over the next 7 years. It could double twice, which is a very important key.
So you just brought up two things there that I think are very important for everyone to know, and that's opportunity cost, right? So you said you could buy, what'd you say, $1,000 TV. That $1,000 in the market could have turned into $2,000. You could have doubled your money instead of blowing it on a TV. So number one is opportunity cost, paying attention to what you're doing with your money. And number two is pay yourself first. So as soon as you get paid, as soon as a paycheck comes in, take 5% of that, 10% of that, stick it to the side, start investing it, and before you know it, you're going to have a mountain of cash. But you have to do that. You have to pay yourself first. It's number one priority. Invest in yourself.
Or maybe you're like me, and when I first started, I really wanted to invest for the past 3 years or so, but I couldn't because I didn't have any money to it. So that when I finally had enough money to actually invest, I wanted to go crazy. I wanted to buy penny stocks. I wanted to buy cryptos. I wanted to make the most money in as short amount of time as possible. But then you realize after a while that that's not the right thing to do, and you kind of learn slowly that you really need to pick wisely. And that's kind of what we're trying to help you guys out.
And we're going to be talking about a lot of this stuff in detail in future episodes, but just to ask you a question, if you want to talk about it. I know you had some credit card debt early on in your 20s, and just talk about that and how to get out of that. Maybe not specifically how to get out of it, but how important it is to get out of that so you can take your money, 5%, 10% a paycheck, and put it back into investing versus paying off banks that you owe 20% interest rates on.
So before she answers that, I want to say, if you have debt, pay that before you start investing.
Whoa. I mean, student debt, you can wait on that.
I mean, not student debt, so but if you have credit card debt, if you're $20,000 in the hole on your credit cards, pay that off or go claim bankruptcy, honestly. Go claim bankruptcy. I'm telling you, you heard it here from
Kevin,
Pat.
do you have experience?
I think you guys both have experience.
If that's the case, go claim bankruptcy and start investing.
Yeah. So the funny thing about this podcast, just to go more broad, is, while we do have a lot of the same agreements on how, investing practices, we don't agree on everything. And there's things that Kevin will say that I don't agree with. There's things Piper will say that I don't agree with. We all don't agree with each other on certain things. And so that's why I think this podcast is going to be interesting to do with 3 people.
I pretty much never agree with Aaron on anything.
And Aaron never agrees with me. He's always like, Bitcoin sucks. Cash out. They're always telling me to cash out since like 2017.
And that's the thing. I mean, like, we could talk more about, other aspects of life, but, you're going to have haters out there. You're going to have people who tell you that you can't make money in Bitcoin, even though Piper, basically 10x her money. So yeah, you're going to have a lot of people, a lot of naysayers out there. And a lot of it is being around a group of people that have the same mindset as you, that are actually investing. You don't want to be talking to people that aren't investing because their feet aren't wet. They aren't in the trenches. They don't really know what's going on. They're just kind of sitting back, and they can say whatever they want because they don't have their skin in the game. And having skin in the game is very important.
Yeah, you don't really understand investing until you make a mistake and you lose your money. You can't give advice. Isn't that right, Kevin?
That is right.
We all have that one friend that is like,
So, Piper, back to the topic, do you have any advice for people out there who maybe are in credit card debt? They want to invest, but, really we're, kind of suggesting first, get out of debt first.
Well, what helped me get out of debt was that I had a full-time job and that I was able to pay it off, honestly, slowly but surely, not all at once. It wasn't that deep. I mean, before I worked here, I was Ubering and living by myself without any help from anyone. So I just slowly did it, honestly.
Kevin, can you pull up a statistic real quick on how many Americans are in credit card debt right now? I'm interested to see that number because, I mean, that just tells you a lot of people, all those people probably aren't investing either. And investing is just such a big opportunity to, double and triple your money over the years.
Well, I can tell you that the average U.S. household income has at least $16,000 in credit card debt.
Credit card debt?
Yes.
And that, I mean, like, there's a lot of houses like our houses that have zero. So
correct.
That means that a good
there's another side that has 30, 40, 50,000.
Yeah, so that's really key. And for me, going back to why, where I started investing, where I got excited about it 5 years ago when I was looking at investing, I was just looking at it as, oh, this is something you do so that you have money when you retire. Well, when you're 20 years old, you're not really thinking about how much money you're going to have when you're 70. Like, who cares? Like, you might not even be alive. You might get in a car accident. Like, who cares? That was kind of always my attitude. But once I realized that you could kind of get short-term gains and get a lot of money, in the, between your 20th and 40th birthday, that was huge for me because then you can retire early. You have extra money to spend with. You can use your money to leverage other opportunities, to buy real estate. There's just so many opportunities when you kind of make it a game like that and just kind of compete against yourself versus just kind of, getting a 401k or even an IRA through your company and putting a little bit of money in there and then having a good, $200,000 to retire with. We're talking about, making $1 million in your first 10 to 20 years of investing and actually having a significant amount to kind of launch you into retirement.
Yeah, and that's the other thing is I think it's important to have a goal, right? And so, and the more specific you are with your goal, the better. So rather than say, oh, I want to have $1 million in my portfolio, that's great, but a better number might be $1.64 million, something very specific. So my goal, I'll just tell you guys, I'll be very honest. My goal for 2018 is to have $44,444. I like the fours,
a lot of
very
fours.
Specific. Have that much invested in my portfolio. So, well, I shouldn't say that. That would be the portfolio value. What I have invested might not be all that because I'm sitting here waiting for this market to crash.
Yeah, so let's jump right into that actually. Where is our money right now? Where do we think this market's going? This podcast is going to go out, a couple weeks after we record it versus the ones that we're going to be doing kind of more live and releasing them immediately in the future. But so where's everybody's money at?
I'll tell you guys right now where we're sitting. What's today?
Today's June 11th.
June 11th. So we're at all-time market highs. Actually, that's not entirely true.
And a lot of this could change by the time you hear this.
By the time you hear this, who knows? But the S&P is at almost at an all-time high. The Dow is at almost an all-time high. Certain stock companies are at all-time highs. The Nasdaq is at an all-time high. So really, tech is at all-time highs. And there's more money than ever pouring into the tech sector right now. So let me ask you this. If you have something, a sector or an industry at an all-time high that most likely it's not going to go up more, at least short term, does it make sense to be pouring billions of dollars into that? It's like throwing money on a gasoline fire.
Who knows? We're at an unprecedented time in history where tech is so powerful. These companies, Amazon, Apple, they're so powerful. Google, they're conglomerates. They're taking over the world. We don't know what their ceiling is. And, we're going to talk about this in a future episode in terms of our predictions of where these companies are going. But so, Kevin, are you mostly in cash right now? What do you, percentage wise of your portfolio, that $40,000, how much of it is invested versus?
So I have about 10 to 15,000 invested right now. The rest is all cash. So I'm probably
30%.
Probably about about 30% cash currently.
Well, I'm about 10% in cash, or 10% invested in, about 90% in cash. I don't have a ton of money. My portfolio, just full disclosure, is only around $10,000. That's just my brokerage account, and I'm about 10% invested. And that 10% investment over the last 3 weeks is now 50% up. So it's a good lesson to be learned there. You're either all in, you're halfway in, or, the difference between 99% commitment and 100% commitment, as they say. What about you, Piper?
Oh, you guys want to know where I'm at?
Where's your money at, too? How many cryptos? And we all have cryptos, too. I didn't mention my cryptos.
Yeah, they all have cryptos, even though they hate on it, but they have it anyways. You got to have it, at least one. Let's just say I'm all in on those cryptos, and I will never cash those out. Even as hard as it gets right now, the market's really far down, but that's okay. Honestly, I've sat through the market of cryptos crashing about 8 times, so this is nothing new. But yes, I do have most of my money in cryptos, and my other investments, I do have quite a bit amount too. I'm not going to say.
So I'll tell you what I'm in. I got, what do I got? Looking at the portfolio right now.
Kevin,
this changes on a daily
Kevin
basis.
Never logs out of his portfolios.
Bringing up the big dogs. Big dogs are barking today. So what are we looking at? We got my largest holding by far is MKL. If you guys don't know what that is, it's essentially the only company that has been able to successfully copy Berkshire Hathaway's business model. So everyone else that's tried it previously has failed except MKL. So I have that. It's my largest holding. I also got Apple, Nintendo, Okta. We love Okta.
You love Okta.
You love Okta. That's fine. It works, Cloud companies.
PAK loves Okta. We got Google here. I sold all my Amazon, got rid of that. But Amazon, I really stick to the tech sector. I don't think I own a single stock that is not in. Well, I guess MKL is not tech, but pretty much everything else is. And then obviously I have some cryptos. And what do we got? Oh,
you're not gonna talk about the big one?
Yeah, what we love right now is IQ.
Yep.
IQ is the big one. I'm up 54% on IQ right now.
Crushing it.
Easy.
And if you're all in with that money, that's 54% of your entire portfolio has grown. Now, it's hard to do that. There's a lot of rules. ERI is a term me and Kevin like to use a lot. What's that called, Kevin?
Emotional rule of investing.
It's the emotional rule of investing. What does that say?
It says as soon as you put your money on something, you can count on it to go down.
And if you don't buy it, you can pass on an opportunity.
And if you don't buy it and you go, oh, I'm just going to pretend that I put $1,000 down and let's just see what happens. Guess where it's going to go? Straight up.
And that's how it is. And a lot of that is mental. I mean, let's not get too deep into that in this episode. I think that's a perfect other episode we can do. But just real quick, I mean, as you say that, a lot of it is that if you don't buy something, you kind of look at it and you only see the ones that are kind of doing well. You might not remember in the back of your mind the ones that you passed on that also did terribly. Yeah. It's kind of that whole, line of sight rule where, you buy a new car, you've never seen it on the road before, and then you see 20 of them on your way home. It's just, whatever that kind of law is.
Well, I think what you're referring to is more of like, I forget what they call it, like a decision maker fallacy, where you remember the one win that you had and you ignore the 8 losses that you had before that.
That's not what I'm talking about. I'm talking more about your mind's tricking you to think that you really messed up by passing on that opportunity, or that you really messed up by selling that opportunity before it went up, when really you actually maybe made that decision the right way half the other times. And you just kind of forget about that because, oh, well, it is what it is.
So can we get back to ERI for a second?
Yes.
All right. So for me, what I like to think about when I'm investing is that no matter what price I buy it at, it's always going to be lower. And no matter what price I sell it at, it's always going to be higher.
And we'll talk about it in a future episode, but what we like to practice here, at least, and this is very hard for all of us, we all try to hold each other accountable. We make fun of Kevin every single day, is holding and not worrying about what the price is doing on a daily basis and just sitting there in the long run and saying, I bought Amazon at $1,000. I think it's worth $2,000. So if it goes to $1,600 and then dives down to $1,400, I'm not going to panic because I still think it's worth $2,000. And, coming to that number is not easy. You have to do a ton of research and look at a ton of different factors, and you could be completely wrong. But just knowing that you can't really react to what the market's doing because your stock might be down at the end of the day. For us, Pacific Standard Time, that's 1:00. In the last 10 minutes of that, day between 12:50 and 1, the stock that we like could be crashing. It simply could be because people are cashing out, and it has nothing to do with the value of the stock at all. So you can't really react to that. You want to just hold and just know that you can go see that movie at the movie theater and not worry about the stock crashing while you're gone because you're just going to hold it for 6 months, 12 months anyways, assuming that everything stays the same in terms of the value and the prospects of the business.
Yeah, I mean, I think, I forget what the case study was, but they showed if you had just bought what Warren Buffett bought back in like 1970, if you had just put $1,000 into what he bought and just left it in there, it would be worth like over $1 million now. So $1,000 turned into $1 million.
And the stocks that he buy become public information a month after he buys them, or
it's that quarter. So whenever.
So if you bought it at the stock when that public information was revealed, 3 months after he bought it at the worst price of that day, the highest price of the day, you'd still be a multimillionaire.
Oh yeah, easy.
Yep. The rules.
And so that goes right into our mentors. Like, who are some of our mentors that you guys want to talk about? I mentioned Phil Town. We take a lot of inspiration from him, but we also have some other ones.
Yeah, I mean, I think can't go wrong with Warren Buffett. Yeah. I think he's proven. He still says some things where I'm just shocked that some of the stuff that he comes out with. But he stayed away from tech for a long time, and now I believe he's Apple's largest shareholder. He's starting to play more in the tech sector. So he said two of his biggest regrets were not buying Google and Amazon. I think anyone that hasn't bought those companies regrets not buying those.
Yeah.
Yeah, it's the obvious choice.
Now it is. The funny thing, even Amazon, what was the price of Amazon 2 years ago?
2 years ago? It was probably
like 600.
Yeah, I'm going to guess. I'm going to say 600.
So Amazon 2 years ago was, about $691.
Yeah.
So about $700. It has since 250% increase.
You would have almost 3x your money.
Almost 3x your money, and that's a company that we all knew was legit 2 years ago. We all knew each other 2 years ago. We were talking about Amazon 2 years ago. If we all just put all of our money on Amazon 2 years ago, that's 2.5, 3xing your money. And that's a company that everybody knows is good. So it's not like you have to find these penny stocks or these random kind of companies like IQ that we were talking about earlier. There's the stocks that are great are the ones that you believe in, the companies that you buy products from every time, because that's how you know they're doing well. If you're buying their stuff, then other people are probably buying their stuff too, like Amazon, Google, and Apple.
Yeah, some other mentors that we like. Tim Ferriss. Great.
He's got a great podcast.
Great angel investor, venture capitalist.
Let's get Ryan to get Tim on.
Oh yeah.
Oh, Ryan, the intern.
Right on that.
So we just hired this intern today. His name is Ryan, and he's going to help us out and get people to come in and so we can do interviews.
He's promised us Warren Buffett, Tim Ferriss, Ray Dalio.
Ray Dalio is another one of our favorites. If you guys haven't read Principles by Ray Dalio, it's a great book. I
will just say that out of all of us, Kevin is the nerdiest about investing. He eats this shit up. He follows all these every day. He's the one who comes to us with all the ideas for the different stocks. I filter out 90% of it, and every once in a while I'll listen to him and we'll score big on a stock.
Yeah, I'm the one who comes to the table with the Rokus and the PAKs and the IQs and the
Yeah, I woke up at
the moonshots.
I woke up at 6:30 in the morning and I got a text from Kevin. He was like, "Your first order of business today is to buy some IQ." And I was like, "Well, all right, I'm doing it." And I didn't even. That's probably bad. You should definitely do your research.
Yeah,
but we're in a pack, and I don't have to always do research if my trusted fellow members here are doing the research.
Yeah, the number one thing that really pisses me off is when I tell someone to buy a stock and they don't, and it goes up, and I'm like, I freaking told you to. Like, come on,
every
it's not
single
complicated.
time. Every single time.
The easiest way to hold them accountable is just take a picture of the stock at the current price, say buy this now, and then a month later follow up and be like, hey, I told you to buy this. Look what it's at now.
Yeah. So speaking of that, if you follow us on Instagram, Piper, I don't even know what our Instagram is.
I just changed it. It's Wolf PAK Investing.
Wolf PAK with a K. Yeah. Wolf PAK Investing. So follow us there, and you'll see a lot of real time. I'll be doing data and research all hours of the night, and I look a lot at trends. So based on kind of how the chart is trending, I get a good gut feel, and that's usually what I operate off of. So a little bit of data, a little bit of intuition. So yeah, follow us there, and you'll get some PAK tips.
Let me just tell you that Kevin told me to invest in Square when it was maybe $25. He was like
$20 a share. I told you
it was $20 a share. Yeah, it was pretty low, and he called it, man.
Yeah, and guess who bought that stock? Me and Piper bought it, and Kevin didn't. He told us to buy it, and he didn't buy it until it was more.
I still bought it. I still did well on that.
Yeah, we all did well on it. But that's another thing is like sometimes I'll tell you guys to buy Shopify. I told you to buy Shopify when it was $95 last December, and I didn't buy it, and it's $160 now.
I did.
Hey, I told you guys to invest in Ripple when it was 3 cents. I told myself to invest in Ripple when it was 3 cents.
Screenshots of her telling us to buy Ripple before it blew up.
That's
literally 5 cents.
Guys, like, and same thing with Lululemon. I've done very well on that because, well, for one, I love meditation, and I believe that meditation can really make you a better investor. When
keep yourself calm when things aren't going well.
Keep you calm, keep you focused, and really just to listen to your intuition. So if your gut is like, oh God, I don't know, it just doesn't feel right, don't do it. But if you're like, you know what, I think I love that company, I'm going to go buy it. Like right now, I'll tell you guys, Adobe is one of those that I'm looking at. Kind of want to buy it. Earnings are coming up. I'm looking. My intuition is just like, no, don't do it. So I haven't.
Yeah, that's my intuition. I bought that right before earnings about a year ago, and it went down 6%. So, I mean, since then it's been up about 50%. So I probably should have just hold that. Rule number one of investing is hodl, bro.
We'll talk about that in a future episode.
Next time.
I think we should wrap this episode up here soon, but let's just quickly go around, and we all work together. We all work for a marketing firm. We all have the entrepreneurial spirit. We all have our own side businesses. We have our own websites. We're starting a website for this podcast, for this brand, wolfpakinvesting.com. Hopefully that should be up by the time this podcast is up. So go to there for, more resources. We're going to be doing some blogs there. Like Kevin said, check out our Instagram. There's a lot of quick, up-to-date resources where we're, giving picks on stocks, as it's happening. So that if you're following us on there.
And we also show you guys on there that we're not bullshitting you. Like we show you our
graphs, our numbers.
Take screenshots of this stuff where they, how much money they had when they started with us, how much money they have now. And we're not bullshitting you guys. Like this is legit.
And we have big aspirations. I think we all want to have, $100,000, $1 million plus portfolios, 5-10 years from now. But we are small right now. And so a lot of what we're talking about is going to appeal to all of you who maybe only have $1,000 to invest, and just to get your feet wet, just to get started, when you're your early 20s, maybe you got your first job and you're just starting to put money away in an IRA where you can control where your money's going versus a 401k where you just kind of let someone else decide.
Yeah, don't be embarrassed if you only have $1,000 invested. You got to start somewhere, and that's the best place to start.
And honestly, if you have $1,000 and you're listening to this, would be shocked if you did not do very, very well by following our strategies. How's that?
But let's just go around before we wrap this up. What do you do? What's your full-time profession? Just to let people know, we're not full-time investors, but we do this on the side with our free time, nights and weekends and stuff like that. So let's start with you, Piper.
Hey guys, I got a degree in graphic design, and I do UI UX design for a living. So basically it's designing websites and optimizing them for users. I don't want to get too much into that, but I am the designer, so I made the logo for this company. And if you see any, that's
all the sick designs are Piper's.
Oh yeah, all the sick designs are mine.
And all the sick podcasts and video is me because I'm the video guy. We call me the CVO, Chief Video Officer.
And I'm the CMM, Chief Moneymaker.
Moneymaker / marketer because Kevin's the email marketer.
So wait, does that make me the CEO? They're like, no.
I mean, Piper, women in business is all the rage right now, right?
I know. We need a woman
obviously,
CEO.
you're the CEO.
Right? I'm a lesbian and a CEO and a woman.
Dang.
That's so hip. Dang.
Yeah.
All right.
That's so hip, so in.
So yeah, we're excited for you guys to come along the ride with us. So yeah, I think we wrap this episode up. The next podcast, we're going to be talking about a few different things that will be up tomorrow. We're going to talk about what is holding, HODL.
HODL, apparently.
What does that mean?
Apparently it's HODL.
We'll talk about a few other things. We're not going to get into specific stocks just yet until we can, release these, kind of on a weekly basis. But, like us, rate us, 5 stars, obviously.
Share us with your friends.
Follow us on Instagram.
Hey. Yeah, all that fun stuff. And follow us on Instagram. Everything. Let's sign off.
Back out.
Deuce.